Welcome to Kicking Ass and Taking Names, the Business Owners Empowerment Podcast. I'm your host, Marlon Griffith Esquire. Join us on this podcast journey as we help you break free from the grind and get your business to work for you. We will delve into impactful conversations with business owners, corporate leaders, professional service providers, and industry innovators that will provide you with insights and actionable strategies that will transform your entrepreneurial path, boost your success, and put you in control of your business journey so you can kick ass and take names. Hello, welcome to the next episode of Kicking Ass and Taking Names, a podcast for small and mid-sized business owners on law, business, and life. I am so ecstatic to have this woman I've been chasing down for months now. And I finally got her, Evelyn Aucoin. Evelyn and I began our relationship through how to manage a small law firm which she is associated with. And many of you have heard me talk about my relationship with how to manage as well, as it's helped me in my business endeavors. Evelyn was at one point what we call a fractional CFO with how to manage. She's now moved on to other duties, and she'll discuss that in this podcast. But when I first met Evelyn, she was on the stage at one of our conferences, and this woman is funny. Good old Texas drawl. She's funny, and she actually made numbers interesting, right? Because she kind of put it into real life, how numbers really work as it relates to your business. And then I had another opportunity to, in small breakout rooms, be in a room with maybe 10 other law firms or what have you. And Evelyn was one of the presenters. And so we got a little bit deeper into some of the questions that folks were asking related to financial controls and the financial health of your company. And I found it to be extremely engaging, extremely practical. And if I could steal her away from how to manage, I would. But
But you're not.
And with no further ado, I introduce you all to Evelyn Aucoin. Welcome, Evelyn.
Thank you, Marlon. I'm so happy to be here with you today. It's exciting to talk about some of my absolutely favorite topics, which are around finance, financial controls, like I say, money math. For me, this is, when you're passionate about what you do, it doesn't feel like work. So I'm very happy here. Mm-hmm. And I've often been accused of being in love with the sound of my own voice as well. So to get to actually talk about my favorite things is really, it's a labor of love. So thank you so much for inviting me. I'm happy to be here.
Thank you. Can you please tell my audience a little bit about yourself?
Yeah, absolutely. My education, my background is in accounting. I am a certified public accountant. I never worked in public accounting. I went straight into industry. And I worked in various smaller companies before I landed my largest industry job, up to the level of director at a Fortune 100 company most people know about, Enron. And so I served there. I had no testimony before Congress, so don't bother Googling. There's nothing interesting about it. And so I was at Enron all the way through the point of the bankruptcy, which was quite interesting. Ended up being part of the trading operations that were bought by UBS. And I brought up UBS trading physical commodities. And then UBS decided to transfer from Houston, Texas to Connecticut, the trading operations. And I was still the primary person responsible for helping care for my grandmother, who raised me, who was in Houston at that point, was in her late 70s. And I refused to leave Houston, and I wouldn't turn my back on her. So from that, I was laid off since I didn't want to move to Connecticut. I had had foot surgery 7 days before. We were in the middle of building a house. I was on crutches. And as I walked out to the curb on my crutches, waiting with my voucher for the taxi cab to take me home, because I'd ridden the bus to work from the suburbs this morning, I looked at the sky and I said, God, the next step is up to you. Just throw open the door that is supposed to be, seriously, because I don't know what to do next. I got an email 48 hours later that led me to a role that I started 7 days later, which led to the greatest part of my career. I was there for
Wow.
14 years in a company I helped start. We
Mhm.
grew it from 0 to 60 million, landing number 26 on the Inc. 500 fastest
Awesome.
growing privately owned companies in America in 2006. And like I said, I was there 14 years. 5 years into it, I became an equity partner in the business. In their first tranche of really going from a kind of a close partnership to the partners left, the remaining person then opened it up to an equity partnership to 10 people. And it was the highlight of my career, was being part of Sirius Solutions, a boutique consulting management consulting firm to the energy business in Houston, Texas. And so I spent the majority of my career with Sirius and retired, air quotes, the
Mhm.
first time at 46 from that business. I gave 2 years notice. My partnership agreement asked for a year. I gave 2 years. My last year at Sirius, I originated over $5.5 million worth of business into
Wow.
the company. And so I wanted to make sure all our clients were taken care of, that I was actively working with and work and serving and making sure we were doing the quality work and go-to-market strategy and all this. So I gave 2 years notice. And then my father died 3 weeks after my last day at work. And he had been disabled since his early 40s. And I had been the trustee for the trust that helped him basically survive. And so I wrapped up my father's estate and the family trust for the next year. And my husband was said, if you don't go back into business, you're going to alienate all our friends because you are so used to talking business and talking finance and doing all of this. And so I don't know if I found how to manage or it found me, but that second year of my first retirement, I came to how to manage. And I've been here now for 5 years. August will be 6. And last year I took a step back from working full time to work part time. And so I currently work part time as a financial strategy literacy expert for our members at How to Manage.
So basically, you had foot surgery. You looked into the sky, and ultimately, you landed on becoming a business owner.
Exactly. The last place I thought I'd land at that point.
Right.
But
Right.
you got to leave yourself open.
Mhm.
Opportunities will present themselves. You've got to have
Mhm.
your criteria where you assess opportunities. Not every opportunity is a good opportunity,
Mhm.
but something I think from being a little bit raw and being a little bit in a place where I was really just open to whatever was next.
Mhm. Mhm.
After everything that I had been through. The one thing I didn't mention is in that same period where I'm standing out on the curb, in the last 18 months before that, my husband had 2 brain surgeries
Wow.
to save his life, same epilepsy.
Wow.
And we had 2 children under the age of 5. I mean, life is a little hectic.
Yeah. Yeah.
And I think there's a certain truth to sometimes you've got to be cracked open to really find out who you are, what you're made of, and what you want. And if I as ever period in my life I felt cracked open, it was when I was standing there on that curb after all the, I hate to say trauma, but I mean, the Enron bankruptcy, my husband's illness, XYZ, like, you're just standing there and a part of you is just like raw and you're just ready to like whatever's next, right? You know, when I ran the Houston half marathon in 2013, and I trained for 20 weeks. And the day of the race, it was 37 degrees in freezing rain in Houston, Texas. When the hell does that ever happen? I'll tell you
Right.
when I'm running 13.1 miles. If we leave the starting line, and as we're going over this first huge kind of uphill, there's not much uphill in Houston except bridges, right? So we're going up this first bridge, and the thunder kind of did, and lightning was off in the distance, and the guy in front of me threw his fist at the sky. He goes, "Is that all you got? Is that all you got?" And I thought, that's it. Is that all you got? That's my whole thing when life throws the bomb at me. I'm
Mm.
just like, is that all you got?
So
It
where?
is these moments that define us. And
Yeah.
I mean, that's it, right?
Where? Where do you think that fortitude come from?
I grew up with a very kind of crazy childhood. So I moved 21 times before I was 27. I'm constantly moving, lived in inner city, lived in the middle of a pasture, changed. I went to 9 different schools between kindergarten and 12th grade. I think there's a certain amount of resilience. You either crumble under those things or you become incredibly resilient. My family went completely broke when I was 14. If not for the benevolence of my grandparents, we would have been homeless. My father was hospitalized for almost a year at that point. I think when you've gone through all of that, at some point you're making a choice if you're going to survive or not.
Yeah.
I really do. And I don't mean to be dramatic about it, but seriously, I think that's how I look back at it. And I look back at who I was at 14 and 15 and 16, and I realized that I just kept moving forward. And I just kept taking the very next step. And I just kept looking for the very next thing, even when I wasn't certain what was going to come after that. And I think where a lot of people might look back at an adolescence that was kind of crazy and XYZ and whatever, I think for me, it just instilled this total focus. I created a vision board when I was 14 years old. Nobody told me to create a vision board. I created a vision board. Who does that? I'll tell you who. This, right? I mean, seriously, because my life was so chaotic. I literally created the life I wanted on paper. And I literally just focused on the life that I wanted, right? And I put this picture in my mind very, very early. And I think that visualization, I think that focus, I wish I could tell you where it came from. I'm not sure. Divine intervention.
Sure.
But you know what? I'm really proud of who I am. I'm very proud of what I've accomplished. I was raised in the South where it's not polite to talk about money. Yeah, screw that. I talk about money all day long. And I was not shy to ask for what I was worth and to go for what I was worth and to make plans around it and to talk to other people about money and so forth. Some of these stigmas that we're raised with. I was kind of the rebel when it came to the stigmas. I know that doesn't shock you since you know me pretty well, but I mean, you want to watch me get fired up? You tell me something can't be done. Yeah, screw you. Get out of my way. Right? Like that's just it.
I think, Evelyn, there's a lot of parallels in what you spoke about, your upbringing and even when you're facing those challenges after the Enron situation. A lot of businesses don't get past 5 years.
Right.
They fail. And often is because, when we write up our plan or we dream of what it's going to be like, we never really anticipate a lot of the hurdles and the roadblocks that's going to come our way. And often what we need to be able to move forward is just to move forward.
Right.
To keep going. Right. Because sometimes surviving is the first step to growing.
Oh, absolutely. And an analogy or an example that stuck with me, again, I heard this when I was very young, maybe in my early 20s. In the Chinese language, the same symbol that means crisis, when you put a second symbol with it, it turns into the word opportunity. Every crisis will present an opportunity if you'll just look for it and you'll be patient. And you take this perspective of looking for the opportunity in it. Through my husband's illness, the opportunity that was there for me was it changed my mindset on what my priorities were. It shifted my perspective. I never was going to look at life the same way. And that was a gift, right? Now, the gift was buried under a pile of poop and you had to keep digging, right? But, there was a gift in there. And you're not always going to be able to have control of the things that happen to you, but you 100% control your reaction to it.
Now, let's tell me, one of the things we've talked about before this call was what we call the money math mindset.
Yes.
Now, in some of my previous podcasts, I talk about relationship with money, and the business owner's relationship with money, and also about how you have to get to know your numbers and be comfortable getting to know your numbers.
Yes.
And I'm pretty safe to say that most of my audience don't have this love of math like you do, Evelyn, right? But the one thing that you said that really stuck with me is you don't have to have a love of math.
Right.
But math is not as complicated as people make it out to be.
Absolutely not.
So talk to me about, what we call the money math mindset.
Well, as a fractional CFO, especially when I was working with members, just for the record, I've done over 3,000 advising calls with our members as both the CEO, fractional CEO, and a fractional CFO. So I've had a lot of money conversations with these small business owners just in my role here at How to Manage, not even counting, the 20 years I was doing it before that. Inevitably, somebody says, well, I know I'm excited to have a fractional CFO, but I just need to let you know, math is not necessarily quote unquote my thing. And I said, yeah, but this is money math. Don't confuse money math with like algebra when the alphabet got involved, right? And it's from this conversation, right, that I actually did some research and realized Algebra 1 is the most failed high school class in America.
Wow.
And people get this idea from algebra and geometry and trigonometry and so forth that they're quote unquote not good at math. Let me tell you, money math is not that damn complicated. Everything you need to know about money math, you learned the actual math skills by 3rd grade. It's not multiplication, division, addition, subtraction. Seriously, when it comes to money, it is that incredibly simple. The thing that frustrates me, well, 2 things. Couldn't we just teach these freaking kids how to balance a checkbook and do their taxes before we get into algebra? I mean, seriously, could we not have just some financial literacy? I know junior achievement is out there. I participate in junior achievement. Junior achievement touches on pieces of it, but it never really gets into the financial literacy part of it. And I'm not about taking algebra out of schools. That's not what I'm saying. But the trouble is we've convinced generation after generation of kids that they're not good at math. In my son's elementary school, I remember being at parent-teacher orientation and them telling me that if they start crying while they do their math homework, just stop doing the homework and write a note because they're not supposed to cry through their homework. Guys, are y'all kidding me? Is this really the mindset we have around it? You know what you tee it up for when you start the teacher would say this to the kids. If you start crying, just quit. They were literally teeing them up to be frustrated and to scare them about their math homework. What the hell are we doing to these kids? What are we doing to generation after generation? And what happens to the mom who herself thinks, well, I'm not a math person. And then when she convinces her kids they're not math people either. And now we just got this dysfunctional cycle, right? I mean, seriously, I became one of the foremost financial analyst and predictive analytics person in my field. And I got a freaking D in high school calculus. Everybody get over it. It doesn't correlate, guys. Wow. It doesn't correlate. And this is why I tell my members, I'm going to teach you money math. And money math isn't hard. And money math is how you run a business and how you get rich, right? And when I say get rich, I'm being a little bit flippant about it. Look, I think everybody needs financial security. I don't care if your magic number is a fraction of what my magic number is, which is a fraction of somebody else's magic number on what financial security is. But everybody has a need for financial security. We do. You've got to have money to survive, to live, a roof over your head. And so it's not really something you can just decide you don't want to understand because it can literally compromise your life. Do you want to be dependent on the government or your children for your financial survival? Nobody does. And so everybody needs to man up and woman up to a certain level of competency in money math in order, to have the life that they want and they deserve.
So tell me, when you had these conversations, you said you over 3,000 conversations with small business owners, either in your role as a CEO or a fractional CFO. Kind of tell me about this. How do those conversations evolve? not only they start one place, but ultimately you want
Right.
to get the owner to a certain place.
Right. First thing is just have the basics. Let's just have our basic financial reports available from a competent bookkeeper on a routine basis. So the first thing we're going to change is if somebody isn't actually getting financial statements every month. And very often small business owners, they do this, right? They just run their business all year, kind of off of the checkbook. They get to the end of the year, and then their CPA actually compiles all of their books in QuickBooks or some other accounting system in order to let them know if they were profitable or not. Like literally it's been under a rock, and they only like do the math when it's time to figure out what we need to do for taxes. That is not uncommon in very small businesses where they're not getting a profit and loss statement, also known as an income statement, every month, and not getting a balance sheet every single month. If
Now,
they have
Evelyn,
AR, not looking at an AR aging, like those are just kind of your basics.
right, right. Uh, I want to take you back before we get into what we term as the financial controls, which is some of what you just alluded to. What do you believe is often holding a lot of business owners back when it relates to their mindset regarding numbers and money?
You know, as often as they have a fear it being too little, it's also often a fear of it even being more than they thought as well. Like they just hide out from it. They just live by, they make their decisions based on the checkbook. If they want to take a vacation, they look at their checkbook and say, do I have enough money for vacation? Yes or no. They have this very linear, black and white view of their finances. And it's very also commingled in the small businesses as well, right? Like some of them even are like paying for their groceries out of their business checkbook. Like they're running everything off of this very short-sighted linear view and making their decisions very linearly. They're not really doing any forecasting. Like they're not even thinking how much revenue is coming in next month, who owes me money, and who's due to pay me in 2 weeks. Like they're not even thinking more than a few feet in front of themselves when it comes to what's happening with the financial transactions in their business.
Well, I'm trying to drill down a little bit more.
Yeah.
That's what they're not doing, but I'm trying, or what they are doing. But I'm trying to, based on your experience, what is the mental part? What is causing this to happen?
It's probably how they watch their parents run their household growing up. If their parents talked about money at all.
It's interesting. I had a conversation with someone recently, and he listens to some of my podcasts, and what he had said to me was, he said, he knows a lot of small business owners, and he said they run their business like a hobby. Right? And I think this is kind of, maybe you're kind of expounding on it a little bit in what you're saying. They run, and it's not intentional, obviously, right? No one is intentionally trying to run a business like a hobby, even if the business is to support everything they want to do, support their family, support them. So it's not like an intentional thing. But what we're trying to do is first have people recognize, what you are doing now, or maybe what you are not doing, is really not running a business where a business needs to be run.
Correct.
And we'll get a little bit later in this podcast about some of the things you can do. But I think it's very important for some people to recognize, because I've found that some clients, quite frankly, because they have certain skill sets, like say they're very good with networking, very good with dealing with the clients, they get a lot of revenue. They have a lot of contracts. The bottom line, or the gross revenue number, is very high. And as you were saying, you referring to a checkbook, but it's almost the same concept, right? They see, okay, I have contracts, and the revenue is whatever, 10 million, 20 million, 30 million. And it seems to them like they're doing very well. And for the average person, absolutely. But
Sure.
often I've found that the organization, that the things they have in place is not consistent with a company that's worth 30 million, has $30 million in revenue or $20 million in revenue, or quite frankly, even $1 million in revenue.
Right.
Because what I want to, and I think you can speak to this, just because you have certain revenues doesn't mean that your mindset has changed. Doesn't necessarily mean
No.
the way you operate has changed. It just may mean that you're being rewarded for the skill that you provide or the product that you produce.
And absolutely. And let me tell you, this is a very common conversation I have with people because at How to Manage a Small Law Firm, our law firms tend to grow fairly quickly. They may grow by 20, 25, or 30% on that revenue line,
Mhm.
right? And very often the owner forgets to shift or loses track of what's enough in the operating account. When revenue was $20,000 a month, that they had $10,000 in their operating account, they were fine. But it's not going to cut it when revenue is 100,000 and your expenses are 80,000. And so very often people's mind in perception on like how much liquidity they need, how much working capital, it really, really lags. Because I mean, I've watched people that for the first time in their life see a bank account with 6 figures in it, and it freaks them the hell out, Marlon. It's more money than they've ever seen. It almost paralyzes some people.
Right. Evelyn,
I had a coworker who told me, and this is in my previous life, he panicked if he had more than $10,000 in his checking account, he'd immediately spend it down. I'm like, because? He said, because it's just too much money to have sitting there. So, when a law firm is grossing $20,000 a month, if they have $10,000 sitting in their operating account, it's probably sufficient. It's enough liquidity. But when they grow to 30, 40, 50, $60,000 a month in revenue, and now expenses are closer to 40, only having $10,000 in your operating account or in working capital isn't going to cut it. And their mindset kind of lags on how much working capital they need when these firms grow fairly quickly underneath their feet. So this is a very frequent conversation I have to have with people in businesses that grow quickly. It was this, that they have to have this shift on how much working capital they need now for this new level, new devil, as we say, how to manage in terms of the growth and the size of their business.
So that now takes us into financial controls. And you were alluding to that a little bit earlier in this podcast. No, you have a saying about financial controls, right? And it's basically you say not effing up the equity in your business.
Mm-hmm. Please.
Explain that.
Well, at the end of the day, if you aren't routinely getting financials, if you are not looking at financial statements every single month, and again, a lot of small business owners aren't, a lot of the small law firms who come to us aren't. Step one is you not doing your own books. Go get a damn bookkeeper, because I love you lawyers and y'all are amazing lawyers, but y'all have no business booking journal entries. Go get yourself a nice functional bookkeeper and just every month get your balance sheet and get your P&L and get somebody to help you learn how to read them. Like literally that is step one. It is that simple. And let me tell you, once you start to know what to look for in your balance sheet and your P&L, it gets a little addictive, because then you understand they're really only, for most businesses, they're only between 3 to 7 probably key metrics to look at between your balance sheet and your P&L. People get overwhelmed because their income statement's this long and it has 50 lines and they kind of glass over. Have someone with a financial acumen who is also not going to talk technically over your head trying to make you feel stupid, because nobody ticks me off more than finance people who like to make themselves look smart, and understand that at the bottom line there are probably just a handful of things you really need to look at month after month to understand what the financial health is of your business. Because if you're a small business owner, that business should become a asset in your personal kind of portfolio, your personal balance sheet. It can be potentially one of the most valuable assets you ever own if you know what you're doing with it. And so you owe it to yourself as the return on your sweat equity, your time, energy, focus, and your capital you put into this business entity to get the maximum value you can out of it. And you can only maximize the value if you understand just some of the fundamentals about how to look at that income statement and the balance sheet. And if you're not looking at them every month, you're going to miss opportunities.
So let's talk about the reports that you're referring to, and maybe a couple of others as well. And explain to us what the reports are, and then what is the reason for the reports, and what is it that the business owners should be trying to glean from these certain reports.
Right. So your income statement, also sometimes called the profit and loss statement, it's generally for a 1 month period. And it's all of your revenues, everything that came in, as well as all the expenses you incurred in the business. So it's going to show you if you're operating with a profit or not. And so the key thing you're using this is to understand what your monthly expenses are, so you understand what revenue needs to be, so that you can have a residual profit at the end of the month. And for most small businesses, you're doing this on what we call a cash basis. And so it really almost reflects the change in your operating account from the beginning of the month to the end of the month with respect to all the business revenue and the business expenses. As a small business owner, yes, you may pay for something personal, pay yourself out of your business account. We're going to treat that as a distribution. That's not a real expense of the business if you just, use some of the cash flow from your business from something personal. So the P&L, the profit and loss, is a snapshot on how the business operated. Again, generally speaking, in a month.
Okay.
The balance sheet is a snapshot in time of what the business owns, your assets, your bank accounts, and so forth, and what it owes. You can have a balance on a business credit card. Maybe you have a small SBA loan, XYZ, as well as then the difference between what you own and you owe is your book value, your owner's equity in the business. The balance sheet is born the day you start the business. And anytime you look at a balance sheet at a point in time, it is a life-to-date picture of where you are over the course of that life of that business. And at that point in time, what you own, what you owe, and the difference life-to-date in your equity or in your book value. People are very intimidated by your balance sheet. The most important thing to do when you're looking at your balance sheet is just make sure it looks right. Does the credit card balance look right? Does my bank account balance look right? Does loan balance look right? That's really it. And you want the assets to be larger than the liabilities so you have positive book value. That's why it's called a balance sheet, because assets equal liabilities and owner's equity. What you own equals what you owe and your equity. It's literally that simple. And people get very intimidated by it. But by just starting to look at it and looking at it over time, it will start to make more sense to you as the balances change. So again, don't be intimidated about it. But also, I have literally had a bookkeeper tell one of our small businesses, well, I don't think you really need a balance sheet. That is the number one red flag on when to fire a bookkeeper. Because anybody who thinks you don't need a balance sheet scares the crap out of me. Let's be clear. You just start with that. And then if you are doing business where you perform services or deliver product and then people pay you, so you have accounts receivable where you've already done the work or provided the product for which people owe you money, you need to track your accounts receivable. Those are basically kind of like, I'd call it the key three of basically your fundamental financial reports that more or less apply to all businesses, professional services, law firms, product-based businesses, retail industry, manufacturing, whatever. They're kind of the big three. If you just start there, it's an incredible foundation for any business if you don't have them.
Okay. So you just mentioned that you have to have someone kind of teach you how to kind of read these reports. So that now takes us into our next subject, which is fractional CFO.
Okay.
Right. Now, explain to my audience, what can a fractional CFO do for a business?
Well, the way I always think about it is that a fractional CFO is there to teach you how to use your financial reporting and your metrics to make decisions faster with more confidence and less risk. Because the bigger your business gets, the bigger your decisions get in terms of the capital they're going to take or the potential return they're going to offer to your firm. And so a true CFO is not there to just help you learn how to use your financials or read your financials. That's almost a little bit the controller side of the CFO world. A true CFO is helping you understand how to use the information to make decisions. That is what a real CFO does. Some people will call themselves a CFO, but if all they're doing is reviewing your financials and like basically reading the numbers out loud to you and telling you what they mean, there's nothing wrong with that. That's foundational. But really, a CFO is there to help you learn how to make decisions with metrics and with finances and with financial data. That's the real key. That's the difference.
So if I'm hearing you correctly, it's almost like you have kind of like two roles of a CFO. I've been talking about fractional because we obviously assuming a business may not be able to hire someone full time. Is one of the roles, as you spoke about, is someone to help you make future decisions, really.
Right.
And one of the other roles is what you refer to as a controller.
Yes, a controller.
More of a financial controller.
Yeah, exactly. And it's sometimes hand in hand with your bookkeeping, right?
Sure.
And so bookkeeping is just making sure all of your appropriate transactions got into an accounting system with completeness and integrity, the right numbers, right? So bookkeeping is a recording function, right? And then these accounting systems have these canned reports. They have a canned income statement, balance sheet. And sometimes your bookkeeper is also the person who can help you understand how to read your income statement and your balance sheet. So they're kind of stepping beyond the bookkeeper role and serving as more of an accountant or an assistant controller, maybe even a controller level type thing. And then again, the difference between a controller and a CFO is really this about decision making, about forecasting, right? A CFO is there when you're making, for example, may I give you an example maybe to illustrate?
Yes,
right?
Please.
Let's say you're going to be moving into a new leased office space and it was naked. It is not turnkey. You're going to have all kinds of the build out done in order to use this new office space that you're going to lease. And so the company you're leasing the space from said, oh, well, we can actually build it out for you. And then your lease, instead of being, I'm going to make up numbers, $2,000 a month would be $4,000 a month, because we'll basically build in that financing for your build out. Well, a CFO is going to look at this and say, okay, it's a 5-year lease. It's XYZ. What's the actual billage for the build out? It's whatever, $50,000. And they can impute what interest you're really being charged if the person leasing you the space says that build out for you. I have found an imputed interest rate of over 100% in that exact scenario, which makes maybe more sense. The build out's only going to be $50,000. Let's just go to a bank if we've got the credit. Let's go get a 5-year term loan. And then let's just pay $2,000 lease, and then let's just pay the term loan every single month, and it come out a whole lot less than the $4,000. By the way, now I don't have a lease that's so far above market. So if I ever have to go sublet this place, I don't have a lease that's double what the market is, and nobody will touch it with a 10-foot pole. That's the type of thing a CFO can do for you. I hate to say it. So we're two key things. We're profit plumbers. We look at where there's some leaks happening in your business so we can make you more profitable. And we're there to keep you getting screwed by other people on financial matters. So we're there to protect you. Because how many people get this deal on this new space and just assume kind of everybody does it that way and goes for the $4,000 and whatever?
Sure.
How many people just don't realize there's potentially another avenue to explore, right? And that's what the CFO is there to help you do, is to help you realize when there's other avenues for you to explore. The CFO is there when you're going to hire any new role you haven't had before in your firm, whether it's a marketing assistant or an executive assistant, or it's an office manager, or it's a COO. Through the gamut, your CFO is there to help you understand how that role can contribute to the bottom line of your business. Every role in any business, every person who works there is not an expense. They're an investment, because everybody should contribute to the bottom line. And that's the other thing the CFO can help you connect the dots on.
Thanks for tuning into this episode of Kicking Ass and Taking Names. Remember, information is only as good as its application. So apply these insights and strategies and start making transformational changes to your business and life today. If you have not already, please subscribe to this podcast on Apple Podcasts or Spotify and YouTube. Keep kicking ass and taking names.